You acknowledge that risks have increased, but you are still cautiously optimistic. I guess, how cautious are you?
Well, certainly, the last couple of weeks and the events of Hong Kong over the last couple of days have heightened that level of uncertainty. What market hates is uncertainty, and right now we are long uncertainty, and hence there's going to be a lot more people that are going to be, a lot more investors that are going to be a lot more cautious. But you really do need to step back and really look at the fundamentals of U.S. economy, and that's really driven by the consumer, as you mentioned, and also by the Fed, and not just our Fed, but global central banks that are easing around the world. There's been more than 20 easings already, and I think that's set to continue.
I feel like, though, in some ways, Linda, we're looking for our Fed to be that knight in shining armor that comes in and slays the sort of global recession dragon. And I just wonder if maybe this time the dragon wins. The dragon eats the knight, because some people suggest the Fed simply doesn't have that kind of firepower right now.
Well, I think the Fed probably does have more firepower than investors are giving them credit for. Certainly, they can cut rates. There's quantitative easing, and I'm sure they can come up with other, programs that we haven't even thought about yet. So I think the Fed is already thinking through this issue. They're not just sitting there thinking that this is the only policy tool that they have. But you're right. I think as we get longer through this stretch and the Fed uses more of its bullets, I think we are going to be bound for more volatility and more really big drawdown days, potentially.
So quickly, Linda, what do we do? Do we just raise cash? What do we buy?
I think investors at this point should be really balanced and leave some cash, dry powder on the side to take advantage of those, big volatile moves. So what we're doing at Federated in some of our funds has been to raise cash. In other funds, we have using option strategies. However, within all of this, I think you still can use some sectors like technology, or some of the defensive sectors like REITs as stocks that can really outperform through the whole market cycle here. And you really want to concentrate on stocks that have strong balance sheets, strong cash flows, that in case the worst does occur and we do enter a recession over the next 2 years or so, these companies can continue to pay your dividend and your income and can come out of the other side stronger.